Credit scores are dropping fast, and they are dropping at the fastest rate since the Great Recession. This is a huge issue, but millions of Americans don't believe their credit score matters simply because they don't plan on buying a house and don't plan on buying a car. I'm here to tell you those are not the only two reasons why you need a good credit score, and we'll address that in a moment. But if you plan to live on your own, you need a good credit score. If you plan to have insurance, you need a good credit score. If you plan to go to college, you might need a good credit score. Or, here's a big one, if you plan to do anything in this world, you need a good credit score, unless you have millions and millions of dollars. So if that's not you, you need to watch this video. Look at this. It says credit scores drop at fastest pace since the Great Recession. And it is turning into a huge issue because repossessions are up. Foreclosures, they're still very low, but they're starting to tick up. We are starting to see student loan debt. Well, you could see your income. You could see your bank account, your money get garnished. Think about that. That's not what we want. But I want to show you some, and let me play this clip for you. Watch this.
Credit scores are falling at the fastest pace in the U.S. since the Great Recession as Americans struggle to keep up with the rising cost of living. Let's go right to CNN's Matt Egan for this. Doesn't sound good.
Yeah, no, John, it's not. It's more evidence that some Americans, they're hurting because of the high cost of living and because of the return of student loans. So FICO had found that credit scores on average, they increased every single year between 2013 and last year when they dipped. And today, FICO says there's an even bigger drop this year. As you mentioned, the biggest since 2009 during the Great Recession. Credit scores, they're still pretty high, moving in the wrong direction, in part because more and more Americans are falling behind on their bills.
Now, I want to come out and just say one thing. Okay, a couple things really quick. First off, credit scores fall for the second year in a row. Okay? They're falling. They're not going up. They're coming down. However, I want to explain what this means because a lot of people are thinking, oh my God, they're freaking out because credit scores are falling. It's just diving off a cliff. Well, not necessarily. Look at this really quick. It says right here, the average score is now 715, down from 714 in 2024 and 718 in 2023. So in 2023, the average score was at 718, which is considered excellent. In 2024, last year, the average score was 717, so it was down 1. This year, it's down to 715. So 2 points down from last year and 3 points down from the year prior. That's not falling off a cliff, okay? So this is where numbers can be a little bit misleading. But this is why it's such a big deal, okay? Because the people that are getting hit the hardest, look at this really quick. Gen Z. Gen Z leads with the biggest drop in FICO scores since the financial crisis. You know how much their credit scores dropped? 3 points. That was the largest. 2 points for the average, 3 points for Gen Z. You're probably wondering, why would I create a video if the credit score is only dropping by 2 or 3 points? That's the average. We are in a K-shaped economy where the rich, okay, everything dropped, everything tanked for the rich, but now it's going back up. What about the lower income earners? Well, the lower income earners got a lot of benefits, but now those benefits are getting stripped away. Credit scores are getting hit. Credit in general is being taken away. Cars are being repossessed. Homes being foreclosed on, evicted from apartments. And this takes me to the next thing. Okay, and I want to show you a map here really quick. Look at this. This is a map of the United States. You probably figured that out. But here's the average credit scores by state. The blue, right here in Minnesota, is the highest, 742. The lowest, down in the south, Mississippi 680, Alabama 692, Louisiana 690. These are the lowest in the entire country. In the South, you know the reason why? Because down the South, they get paid the least. They get paid the least amount of money. But yet the cost of living continues to rise. So people are putting expenses on credit cards. They can't pay their car loan, can't pay their home loan, can't pay personal loans, can't pay student debt. It's turning into a massive crisis. But let's keep listening to this.
FICO says that delinquency rates are at or near the highest level since 2009 on car loans, credit cards, and also on personal loans as well. And Gen Z, they're under even more pressure. FICO says that credit scores for Gen Z down by the most of any age group since 2020. And part of that problem, of course, is student debt, right? Starting in February, they started to report delinquencies on student loans for the first time since COVID. And FICO has found that a record high 29% of people who have student debt have been reported as delinquent. Only 62% have actually made a recent payment. And look at this, another 9%, they could be reported delinquent soon because they have student debt, but they have not made any recent payments. And it's not just student debt, right? You think about young people also contending with the worst job market for recent college graduates in years. I talked to a 22-year-old from Orlando who told me it took him 14 months and hundreds of job applications before he landed a job that wasn't a scam. But he said he's not making nearly enough money to get by, let alone to chip away at his $35,000 in student debt. So he said his credit scores have taken a drastic hit. And he's not alone. FICO found that almost 2/3, 64% of Gen Z student borrowers, they rely on more debt just to get by.
That's insane. Gen Z student borrowers rely on debt to get by, 64%. That's incredible. But this is why it's such a big deal, okay? Why are credit scores dropping? Well, they're dropping because people are missing payments. And they're missing payments for a whole, there's so many different reasons. They're missing payments because they have to cover a different bill. Missing payments because they lost their job. Missing payments because they're getting their wages garnished. Whatever it may be, they're missing payments. That's the start. Then we see more and more Americans have a high utilization rate, meaning they have $10,000 on their credit cards, total. That would be 100% utilization. Well, if they have $9,900, they have a 99% utilization rate. That's too high. It needs to be under 30%. So right there, that's a huge issue. That's knocking credit scores down. And here's another one. We're starting to see more people opening up new lines of credit, trying to open up a new account because they need something to be able to charge to. All their other accounts are maxed out. So what do? They open up a new account. But here's the problem. Too many recent inquiries is going to actually hurt your credit score. That's what's happening at this time. Now, here's why it's important. Even if you don't plan on buying a house, buying a car, if you don't plan on using your credit in that way, that's fine. I think interest rates are still too high. But here's the reason why this matters. If you plan on getting approved for a home, and I'm not talking about a mortgage, I'm talking about going to rent an apartment. Guess what happens? They normally do sometimes we'll do a background check. They'll do a rental history. They will check your credit score. If you have too much debt, there's a good chance they will not accept your application. Okay? So just keep that in mind. You want to go and move out, stay somewhere on your own, get an apartment based off your own, credit history and your income. It may not happen if your credit score continues to drop. Here's another one. If you want to just borrow affordable loan, doesn't matter. It could be a personal loan. It could be for some type of ATV. It could be for you need to buy a new computer, whatever it may be. Again, this is some people. That's what they do. You are going to have to pay more if you have a bad credit score. Here's another one. You want lower interest or lower insurance? Yeah. Make sure you have a decent credit score. If your credit score is shot, if it's horrible, you're going to pay more for insurance. Okay? Just so you know. Now, I want to finish playing this clip for you really quick, and then we'll talk about it.
People who have student debt, they've got to rely on credit cards and buy now, pay later, and also personal loans just to pay their bills. So, John, I do think this is just more evidence of the K-shaped economy, right? Where a lot of people who have money in the market, they own their home, they're doing okay, others are not, and it just shows this disconnect where you got Wall Street, there's all this euphoria. Main Street, though, a lot of people, they're struggling.
There you go. On Wall Street, people that are invested into the markets, they are doing pretty well. Okay, I think most people, their portfolios are up over the past several months. But for those that are not invested, those that don't own their own home, those that don't have other assets, they're struggling. And for many people here in the United States, they don't have their own home. They don't have money invested in the market. They don't have a business or another asset. So they're almost screwed. So I'll leave you with that. But let me ask you this one question. What is the highest your credit score has been? If you haven't checked it recently, I highly recommend you do that. It's free. But what is the highest your credit score has been in the past 6 months? I'm just curious. Let me know down in the comment section below. Don't put in your social security number. I'm not going to check it for you. But go check it and let me know. What is your credit score now, and what is the highest it has been in the past 6 months? Because according to multiple reports, credit scores are actually somewhat going down on average, not going up. That's a problem. So, just want to thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.